Apple, the shares closing yesterday at an all-time high. Stocks rallied 50% from the March lows. Now has a market cap of $1.5 trillion. Joining us to discuss what's next for Apple and some other tech names, Steve Milunovich, tech strategist at Wolfe Research. You add Microsoft, Amazon, and Facebook in, and you're at $5 trillion, even though Apple's the most valuable. So a lot of tech has been helped, actually, in a kind of a perverse way by COVID-19, I guess, accelerating the digital transformation, stay-at-home, things like that. But also, you'd have to mention the flood of liquidity from the Fed, which has been more important for these stocks, Steve.
Well, the flood of liquidity, I think, has been more important for the entire market. But I remember, Joe, you and I talking a few years ago about could Apple even become $1 trillion market cap? And here we are with multiple tech companies. And we actually put out a report a few days ago that tech is a, quote, winner in COVID, if anybody's a winner, because it clearly has accelerated digital transformation. And, Apple stock has been absolutely amazing. Even if you take the top 25 market caps in tech, it's the second best performer over 12 months, the fifth best performer over 3 months. It's now at 25 times earnings, which is expensive historically. But they've had 5 quarters of beating numbers, and earnings growth looks like it's going to accelerate over the next 4 quarters. So it still is in pretty decent shape.
We've had some broadening out of the move in a lot of not just tech, but the markets in general. Are you troubled that so much is concentrated in these beloved names right now?
Well, we've certainly been troubled that within tech, it's been very focused on the large market caps, and our Wolfe Tech universe is equal weighted. So really until April, it had been a market performer for the last 12 months. Just within the last 2 months has our index started to outperform because it has broadened, as you point out. So within tech, I'm encouraged that we're seeing some broadening. In terms of tech dominating the market, yeah, it's starting to look a little bit like 2000. I would say that things are different these days. The quality of companies is much better. The SaaS software companies are real. It's not just about eyeballs, but we are getting overbought in the market, and so eventually a consolidation is likely.
So if you look at the hardware, software, the internet, services, would you buy them across the board, or which of those would you segregate the main part of your interest?
Yeah, Joe, we'd be selective. So we're still underweight hardware and semis because they tend to be very economically sensitive. When value is doing well in the market, as we've seen somewhat recently, you see particularly semis do a bit better, but we still think it's early. Software, we downgraded 2 months ago. Software has become expensive. The most expensive names in tech coming into the year are up 40% this year. And you've got some really high sales ratios there. So we're getting a little more concerned about software. We tend to be in internet, which has done extremely well, particularly e-commerce, and services, particularly in the transaction processing payment space, has actually underperformed, but we think that comes back with the economy. So PayPal, Square, names like that. So we'd be overweight internet and services.
So Steve, when did Apple, it was even Steve Jobs, I think, first talked about making their own chips for the Mac? How long ago was that? And then now it looks like it's really happening as of some news yesterday. Is it going to happen? Why is that? Is that a positive for Apple or just more a negative for Intel?
It's probably a slight positive for Apple. This has been speculated on for a couple of years, and obviously they've been working on it for longer than that. I think it says a couple things. Number one, Apple always wants to control its own technology, so it does expect to bring better products and experiences to consumers, so that's good for Apple. Second, as you point out, I think it is at least a marginal negative for Intel. It clearly says that TSM in Taiwan has moved past Intel in terms of processing capabilities, and Apple's noticed that. And third, frankly, I think it argues that NVIDIA is becoming the processor company to watch going forward. So I think NVIDIA is going to be a big winner. Already has been, but will continue to be in the future. But yeah, I think it's positive for Apple.